Hey everybody, Logan Alex CPA here from Choice Tax Relief. So I recently made a video on the IRS notice LT16. In that video, the redacted notice that I showed on the screen, the notice LT16, indicated the taxpayer had a balance due from 2014. And MJ is asking, Alec, shouldn't some of that fall off due to the CSED? And the answer is maybe. So here's like what MJ is referring to. So this is my old video on the notice LT16. In the billing summary, it's saying, hey, you owe about $80,000 for tax period ending December 31st, 2014. So what MJ is saying is, hey, that's the 2014 tax year. The IRS has a 10-year statute of limitations to collect a tax debt. The last day of that 10-year period is the collection statute expiration date, or CSED. That MJ mentioned in his comment. Of course, that 10-year period can be extended for certain events, but let's ignore that for the time being. Well, we're going to come back to that later. So, MJ, I would say this is a cut and dry situation where this taxpayer filed their 2014 tax return on April 15th, 2015, and there have been no tolling events. Right? No installment agreement request, no offer in compromise request, no bankruptcy, nothing to extend that IRS 10-year statute. Then yeah, this debt would very likely, well, it would drop off 10 years from the assessment date. So, if it was filed on April 15th, 2015, it was probably actually assessed in the government's books sometime in May, let's say mid to late May. And so probably, at some point in May 2025, it would drop off and it would be written off. You look at the account transcript, you'll see those negatives on there, write off, and the taxpayer doesn't have to worry about this tax debt anymore. Possibility. Now, that's not the only thing that could have happened here. What if this taxpayer didn't file their 2014 returns until the year 2019? Well, then this tax would have been assessed at some time in 2019, and that 10-year time limit, even absent any tolling events, would be up in 2029, right? And then if there's tolling events, right, if they've been in and out of installment agreements, if they've had a bankruptcy, if they've submitted an offer in compromise, right, that 10-year period could have been extended by a year, or more or less, right? I mean, it depends on what the tolling event we're talking about. It's a good question, MJ. And, really when we get a client, one of the first things we do is determine what their collection statute expiration date is. Yes, we see what the IRS has on record, but then we do our own internal calculation of the CSEDs by tax year, because sometimes the IRS gets it wrong. TIGTA actually came out with a report last year saying that in this sample size of taxpayers, in a, I think maybe, was it 20% or 30%? It escapes me off the top of my head right now. But in at least 20% of the cases in the sample, the IRS calculated the collection statute expiration date wrong, right? That's why it's important to understand the rules concerning the collection statute expiration date, because sometimes we won cases by saying, IRS, hey, the CSED date you're calculating, it's too late. This tax had actually already dropped off at an earlier date, and you're still trying to collect on them, and we have to kind of prove that. If you'd like more information on the IRS collection statute limitations on collections, check out this video at the upper left-hand corner of the screen. I have my other tax relief videos at the bottom left-hand corner of the screen. If you owe at least $10,000 in back taxes, give us a call at Choice Tax Relief. You qualify for a free consultation, 866-8000-TAX. That's 866-8000-829. Or visit choicetaxrelief.com, fill out the form, and we will reach out to you. Thank you so much for watching, everybody. Thank you, MJ, for the question, and I'll see you in the next video. Bye-bye.